All right, good morning, guys. Today is Wednesday, April the 12th, and this is live CPI trading. So the CPI news just came out right now. And ideally, we don't trade the first 5-minute candle, so we need the first 5-minute candle, news candle to close. Then we need the next 5-minute candle after news to also close in order to determine the direction we'll be trading. So let's see what we have here. Wednesday CPI. Okay, so this means that so CPI is the consumer price index, if I'm not wrong. Yeah, consumer price index. So it ideally gives an idea of the inflationary rate. Let's see, I'm guessing EU and gold are okay. So EU is blowing up, gold is blowing up, US 30 is also blowing up. So one way to interpret this news, let's see. All right, so the news is red, ideally showing that inflation is going up, which is expected, and that's fine. So what we're looking for after this, if we get a bullish candle, we're looking for the next candle to retrace. And you can see, like, for example, US 30 is already starting to come back down, but we are looking for this candle to see if it's a bullish or bearish candle. If it's a bullish candle, we need the next candle to open. Normally, during news, this is the pattern we're looking for. So if this is bullish, we are waiting for the next candle to retrace and then keep going up. However, I do see this as a trap. I'm still expecting these assets to drop back down. So today is just ideally just checking to see if the pattern is going to play out. But if I do trade, I will trade with a small lot size because I think this is ideally also a trap for buyers. Because ideally, if inflation is going up, inflation ideally is not also normally shouldn't be good for the economy. So you should see a dip. So I think this is just market manipulation. So we'll just wait and see how this plays out. All right. So based on news, this candle should retrace, like ideally how we traded NFP. But if this candle keeps going, so the only issue with CPI that I've noticed, it doesn't do the same pattern as NFP, as FOMC. So for CPI, in any case, we need to wait for a retracement at the top side. So price can definitely keep pumping up. So that's why I'm not selling, and I've definitely seen this before. So we need to check where price is likely to head. So we do have this supply zone within a supply zone up here. So we do have a bunch of sell zones at the top here. So for any sales, for me personally, I will wait for closure below the 9 EMA, retest and closure below the 9 EMA. But CPI does not always move like NFP and FOMC. So that's why even if I do take a trade during CPI right now, I'll use a small lot size, because ideally what we needed is for this candle to open and come back bearish, but you can see there's heavy bullish momentum. And let me see, I think I'd journaled something about how CPI moves, so just give me a second to see the journal. Okay. Yeah, so right now it's pretty much a waiting game. See for my notes on CPI. Okay. So ideally inflation increase is a negative for stocks. So that's what I said. So when inflation goes up, that's not good for the stocks. But it's also positive for the US dollar. So ideally right now, what we should be expecting is, give me a second. Let me make sure I'm interpreting that correctly. Just 1 second. Make sure I'm interpreting this right. Okay. Let's go for the currency. Oh no, actually, what's the previous one? This is March 2014. Let me make sure. I just want to make sure I'm getting these numbers right, because I think instead of an increase, there might have been a decrease. So they expected this, the previous. Oh, actually, there was a decrease in inflation. Okay. Yeah, so that's why US, I'm sorry, I kind of got it the opposite. So there was actually a decrease in inflation, and that's why US 30 um is pumping up, because ideally inflation is not good for this for stocks or the economy. So yeah, so the reason it's pumping up is actually there was a decrease. So they expected the inflation to be 0.2%. However, it was 0.1%. The previous inflationary period, I believe, for last month was about 0.4, because they said right here previous is 0.4. So there was actually a decrease in inflation, and that's why you see this pump to the upside. So actually right now, I wouldn't even be looking for sells. I would just be looking for, unfortunately, we don't have any buy zones around here. Gold, we do have an hourly bearish high, hourly bearish low. EU, we really don't have anything. So let's see if this pattern will play out. So remember, this pattern to the downside should be the second 5-minute candle after news. So ideally, that's where you'd look to buy. So if this current 5-minute candle closes as a bearish candle, then ideally it would be going per the way I analyze news, right? Either a strong pump up or strong pump down, and then you wait for a retracement on the next candle. And then at that point, you continue with the trend that was given by the first candle. So if this candle closes as a bearish candle, that's when I would say to look for buys. However, for US 30, let me see if I can find a confluence for a buy. There's no trend line, there's no markup for a buy. I think gold only has an hourly zone. EU really has nothing. Okay, so this right here would be the buy for US 30. However, for this trade, I would say if you're going to enter the trade, use 100 pip stop loss, and do not risk even 0.5, risk like 0.25, as this is a fill a lot. So this would be the buy for US 30 around here. Use 100 pip stop loss, 100 pip take profit, 100. All right, so the reason we're in that is because it's playing with the strategy for news, right? Look for a pump up or pump down, wait for the retracement, and then go back up. However, for this trade, do not risk even 0.5%, risk at most 0.25%, use 100 pip stop loss, 100 pip take profit. But I'm pretty sure US 30 is fully bullish, gold is fully bullish, and EU are fully bullish. So there you go. The trade is back in profit. Let me see. I can do this. And I need to re-enter this trade. No, that's EU. 100 pip stop loss, 100 pip. And I do have some trend lines up there, so I do expect US 30 to keep pumping up. There you go, and I will enter. Oh wait, God, my copy is acting up again. Let me see, give me a second. But that is the trade. It's currently in profit. I'm still not yet filled in. I am looking for this. This is what I'm looking for. Properties. Okay. There you go. Properties. Right. So I am filled into that position. All right, so keep in mind, do not risk anything more than 0.25% for news. Use 100 pip stop loss, 100 pip take profit. The only time we can scale in with a bigger lot size is if this current candle closes as a bullish candle. That's the only time I would say to scale in. And there you go, back in profit. Right? If this candle closes as a bullish candle, I do see a spike to the upside or continuation to the upside. There you go. We are back in profit. All right. Trade is back in profit. Let's see how it goes. There you go. So this is what we want. We want this candle to close as a bullish candle. So we are up in profit about 10 or 20 pips, if I'm not wrong. There you go. Let's see, US 30. So keep in mind, we entered this trade because it played out the markup for news. So news, we normally look for a strong bullish candle or strong bearish candle on the first 5-minute candle, and then we wait for a retracement to the opposite side. So we had this strong bullish candle. The next candle gave us a retracement to the downside, and then at that point, that's when we enter into a buy. But for this particular trade, keep in mind, I told you guys, do not risk anything more than 0.25% for this account. Don't risk anything more than 0.25% for this trade, and use 100 pip stop loss, 100 pip take profit. And at that point, you should be safe. I think we'll get better entries during New York Open. On the other hand, I do have a bunch of trend lines that are holding price to the upside where price currently is. So that's another confluence right there. Let's see how the others are trading. The other thing we need to be cautious of, you can see we are in a supply zone up here. So ideally, the reason we entered this trade is to follow through with the pattern of news trading. But you do see we are in a supply zone. But I do see price going up to this supply zone within a supply zone. And then at that point, that's when we are probably going to have a good sell to the downside. But for now, I'm still holding this buy. If anybody has any questions, feel free to go ahead and ask. All right, let's see. So if you risked, so I did say for this rate 0.25%. So, but just keep waiting, just keep holding for it. Now, if this candle does come up and close as a bullish candle, I will scale in. At that point, we might even get a bullish hammer candle if that does happen. So if that does happen and it comes back up, closes as a bullish hammer candle, I will enter in with a bigger lot size, probably going to risk 1.25% of my account. Because ideally, during the last two news trading periods, we have had a return of between 1% and 1.25%. But if this candle does come back up and close as a bullish hammer, I will enter in with a bigger lot size. Okay, let's see the other trades. Gold tapped into this supply zone within the supply zone. We have an hourly bearish high here, hourly bearish low. This weekly high, let's move it somewhere up there. So gold, we are in a supply zone within a supply zone. EU is ideally like US 30. We don't have any markups around EU. So gold is the only thing that has markups around it. Yeah, US 30 and EU ideally the same. All right, there goes. We might get that bullish hammer candle, still coming back up into profit or break even. So yeah, so this price point up here, this supply zone within the supply zone, this is where I expect price to come for US 30. Because ideally here is where we do have some good or more sellers up here. So even in this zone, so overall we are in a sell zone. However, this is the zone that has higher probability of selling. Not to say that they can not just take price all the way back down from here, but to me, this makes sense for them to bring price up here, in which case our TP should get triggered around that zone. So let me check. And we are also still above the bullish channel. So that's good. We are above the 9 EMA. So the only time I would start rethinking about closing this trade is if we get a closure below the 9 EMA. But so long as we stay above the 9 EMA, I am still holding onto this trade. All right, so gold is also retracing up. So I'm expecting US 30. So gold and EU are retracing up. I'm expecting US 30 to follow suit. US 30 is just moving a little bit slower compared to gold and EU, but okay, so this was for this candle. So this is ideally why we bought here. So there are trend lines here. Looking at my MT4, still holding price to the upside. Let's see. I'm gonna go in, but I need this candle to close because I do have a trend line that's holding price up here. But personally, I will scale in around this zone for a quick 10 pips. That trade is not going to count. The only trade that's counting towards towards the returns is the trade that's currently running. But I just want to catch a quick move from the trend line. So we have a minute and a half. So if that does close, I will enter personally into a buy. Let's see. And yeah, so that's what I want. So it's rejecting straight from my trend lines, but I need this candle to close as a bullish candle. Let's see what I want to do. I'll do a 20 pip take profit. Yeah, but you can see price. For you guys, so no need. If you enter into this trade with me, keep in mind this is not counting for the live trade. The only live trade I marked up is this one that's currently in drawdown, but I am trading based off of trend lines I have on my MT4. So if you enter with me again, do not risk anything more than 0.25%. Personally, I might go for a higher risk than that, but for you guys, do not risk anything more than that. Okay, so 525. So I need this candle to close above my trend lines. And I need it to be a bullish candle.
Sorry, I missed the beginning of the live. So it's 100 pip stop loss, 100 pip take a profit, huh? Right?
Yes, 100 pips stop loss, 100 pips take profit. Yes. 50. No, oh yeah, 50-50. Yeah. So the one I just sized in right now, 50 pips take profit, 50 pips stop loss. And there you go. Trade is in profit. I'm just closing on some of my other accounts because the one thing, if you merge accounts or if you're copying accounts, I don't like trading. So we're in profit. So I sized in here. So keep in mind that won't count. That's just personally for me. But I sized in a buy here. But I did tell you, if you guys also size in with me, do not risk anything more than. And there you go. So for this trade, I had a 50 pip stop loss, 50 pip take profit. Oh, I think I said 20 pips. Yeah, but I put in 50 pips. So that's the trade I'm currently in. I'm in with a bigger lot size. I just want to I don't like being in trades before New York Open. And the reason I entered this second buy is because we do have some trend lines on my MT4 that are holding. So and that's why I was waiting for closure of that candle, and it did close above my trend lines on MT4. So yeah, so I'm still in that position. I've closed it on my other accounts that are copy trading. So I'm only in this trade on this one account. So remember the first trade is coming back to break even. I did say for that, the first trade risk no more than 0.25%. Now, actually, this trade I might hold it longer because remember we needed a closure above, like another bullish candle to close above our entry. And we did see that gold was moving up. I think gold has started coming back down. EU also has started coming back down. So this trade, if you're in with me with 50 pips take profit, 50 pips stop loss, you should be, yeah, you should have been around break even, right? Because we set break even if the trade is halfway in profit. So just make a decision whether you want to close that trade. So there's also trend line to the upside that's holding price around our entry. Yeah, so depending on your risk, right, it's all about risk management. If you can afford for both of these two trades to hit stop loss, And you just lose what? You just lose 0.5%. Well and good. If you did scale in with a larger lot size like I did on the second trade, you should have been in profit in both trades, and in which case you should have just closed out and probably waited for New York. But personally, I am still in both trades. Now, if we do have a 5-minute candle closing below this bullish candle that I was waiting for, that's when I would think of closing out my second entry, because keep in mind, the reason I entered this buy that went up about 25 pips in profit is because I do have trend lines on my MT4 that are supporting price. But for today, the only trade that's going to count towards the returns is the first trade, because the second trade, ideally, that's my own confluence. So all right, gold is coming back up. That's what I want to see. I want to see these other instruments coming back up. So gold is coming back up. EU is still hanging. Right. If this candle does close below the previous candle, that's when I would say reconsider closing your trade early. But you guys should have already been at break even. Because if it closes below that candle, it will be closing below a trend line. So that's why you should always set break even. Okay, so it did close below. So if you're not still willing to ride this price either to the downside, because for me it's a little bit away from, so for me personally, I'm still holding. The reason I'm holding is because I know where to recover from. Because at this point I'm looking at my trend lines. But so long as you never risk anything more than 0.5% for both trades, you should be fine. Okay, so for me, this trade, the second sizing is about to hit stop loss. Excuse me. Let's see. But where the stop loss is, there's also another trend line up there. Now, keep in mind, we do have a supply zone within a supply zone below that area. So if either of this, so if this second trade hits stop loss, just do not try to size back in. That's if you guys entered. But the only trade today that's counting is the first trade. As the second trade, I just say that was my own confluence. But that second trade that we did take uh, went up about 23 pips. So does anybody have any questions on either of the two trades? All right. All right. So gold is pushing up. I want to see this two instruments, gold and EU, pushing up, because ideally US 30 shouldn't be far behind. Um, let's see. Let's see. I think for me that trade. Okay, so that trade did hit stop loss for me. So for this trade again, did say don't risk anything more than 0.25. That's if you are entering. But remember, this trade wasn't part of any confluences. That was just my sizing trade. Actually, I should have just closed it when I was up 23 pips. Right. Give me 1 second. Okay. I'll close that. So I still see US 30 coming back up. But I'm just gonna hold and wait for any confluence. So we do have a last trend line that's holding price up here. That's the last saving grace for US 30. All right, so yeah, I think the first trade also, no, it's still, I wanna see if it's still, so the first trade is almost a stop loss. And so if this first trade does hit stop loss, which it did on mine, that will be it until New York open. But keep in mind, so the first trade we are risking 0.25%. The second trade I did say you should only enter if you want to. So I didn't call the second trade as an official trade. But I did say if you're going to enter with me on the second trade, you should risk no more than 0.25%. That way for both trades, if you lose 0.5%. If you only entered the first trade, you should only be down 0.25%. The other review I did say initially that CPI does not always move like FOMC and NFP. So keep in mind FOMC and NFP normally play out with this pattern, right? So either a strong bullish candle, a strong first 5-minute bullish candle during news, or bearish candle. And then we wait for a retracement depending on if the candle was bullish or bearish. And at that point, that's when we enter the buy. So the reason I entered this buy was because I got a similar pattern. So strong bullish candle, retracement with the bearish candle, and then that's when I entered. We did go in about 20 pips in profit. And then even on the second trade that I scaled in at, we were up about 23 pips in profit. Yeah, so for now, if you did take both losses, that's minus 0.5 for the day. And then we still have New York session open. So that should be an easy recovery during New York session open. But until then, I don't think there's anything I'll be waiting to do right now. Does anybody have any questions? If not, I'll see you guys during New York session.
Just a question. So you'll be back like in 1 hour, something like this?
Yeah, at around 9:45 because I have a meeting to get to at 9:30. Yeah.
Okay.
Yeah, but for right now, don't revenge trade, don't do anything. If you followed my advice of the risk percentage. So like for here, so I did say the second trade wouldn't count because that was just my own confluence. So if you did follow, oh no, this should be minus 0.25. So we should only be, personally I'm minus actually even more than 0.5 for the day. But yeah, but if you did follow my calls for the risk percentage, you should be at most down minus 0.5%. But officially, since there was only one official trade, the first US 30 buy with 100 pip stop loss, 100 pip take profit. That trade I did say was a 0.25% risk. So we, during this week, we've had a 1% return. So minus 2.5% is not anything. So yeah, I'll see you guys at around 9:45 a.m. Eastern Standard Time, which is about 35 minutes from now. But if you do see between now and then, I don't recommend entering into trades before New York Open. But if you do see any of our confluences, feel free to take them. But again, do not risk, do not over leverage, right? If you're already down point minus what minus 0.25, no, minus 0.25 for the day, just risk maybe 0.25 until we get on the live session. If you do see a good setup, you can risk 0.5%, but keep in mind we do have a supply zone within a supply zone here for US 30. So US 30 overall was in a sell zone. I still expect US 30 to come back up, and then maybe at around 34,000, that's when we'll get a nice sell on US 30. But I do still expect US 30 to come back up. And after the live session, I might just do some quick scalping by myself. Yeah, but if you find any confluences, like an example of a confluence here would be closure below the 9 EMA, which we already have right now, retest of the 9 EMA and closure below. Ideally, that would signify a sell. However, we do not have any bearish markups here. The only zone we have here is a sell zone. We don't have any trend lines to help us. So, this is why I'm saying it's kind of risky where US 30 is at right now. If you do draw trend lines on your MT4, you should be seeing trend lines on your MT4 right now. Gold is the only trade that I would say would be a good trade because we do have an hourly bearish high, hourly bearish low, a 30-minute bearish low here, and gold has been rejecting from this sell zones. So if these three assets keep selling even after New York session, I would look to enter a sell on gold somewhere around 2023, because you can see that we are in a heavy supply zone in there, and we have an hourly bearish zone. EU is pretty much like US 30. We don't have any markups for EU also, other than knowing that it's in a supply zone. Yeah, but other than that, I will see you guys in about 30 minutes. Yeah, in about 30 or 35 minutes. All right, bye.
Mhm.